Good morning and welcome to the Breakfast Club. My name's Darren Hancock. I'm your host today for September 12th, 2023. Doing some live tape reading today. Let's get rid of this thing here. People know what I'm doing. We're looking at the U.S. tech today. As usual. Might have a quick peruse through these other ones. This is British pound, the euro dollar. Well, that came back into what I was looking for the other day. Okay, good. Came back into the fair value gap on the daily. Looking for a run below these lows here. I like this imbalance down here. And I like this. Well, we've already hit off of that. Hit off the body of that. So digging into these lows is what I'm looking for first. First take out this short-term low, and then go for these lows over here. That's the euro. Natural gas. I'm pretty big into natural gas. I do believe this is going to be a big runner this year as a long trade. It's got some great upside potential. As we can clear these old highs here, come back, find some support at that consolidation we've been in for the last, or most of this year. If we can come back inside that, or at least get on top of this this fair value gap here, find a foothold right here. This can be a big run. Old lows, big pockets of price gap where there's no price delivery on either side. I like that. So I'm long on natural gas long term. It's not a short term play for me. This is going to be like one of those mega trades I got in down here. So I'm looking to get at least back to these equal lows here. Those ones are going to be like 8 to 10 months at least. Or inside this fair value gap here on the Australian dollar on the daily. Now we've got a wick above it, but I want to see a body get above that, come back and find some support here. Use this as an inversion fair value gap on the daily. So you're pretty much stuck inside there, so natural gas, we'll move that down there. Aussie dollar, New Zealand. There's a little price imbalance down here. Keep your eye on that. We're back into the support candle here now. So does this wick or the body provide support? Your level of keep an eye on it is right there. So you don't want to break the threshold of that candle on the way up. So I'd like to see that hold off on this body here and continue down into that little pocket of price action on the New Zealand dollar on the daily. We'll make that blue in case I have to look back on that later. Days are always blue. I always like a block in my day, so when I'm in the lower time frames and I look up and I go, oh, okay, it's blue, that makes it the daily. So that we're sitting up, bouncing off of a higher time frame daily fair value gap or price imbalance. So I like this inversion, this acting like an inversion fair value gap now. So if I come down from the daily, that's the sliver of the one we talked about a couple of days ago. That was the sliver, the one we were aiming for on Friday. Well, we got it on Monday. Now we've come back to it. Now I want to see some support here and then push up. Continue running back up again for older highs. Like this, back into this fair value gap on the daily here. If we look at the daily, I like this little, we've still got this objective up here, this price imbalance. We've come very hard into here, so I want to see that last little piece stay open. And this push up to equal highs. Finish off the rest of that. This has been traded pretty good in the first 50% of that fair value gap, or actually more like 25% of that. We got lots of wicks probing in there, but we have no real bodies getting past the 25% of that fair value gap. So I'm looking to see that thing push into the 50%. So I want to see this. I'm more biased on the upside, and we may have just landed right here hard on the top of the order block on the daily. Let me move this guy out of the way. So yeah, we may still get one more push down in here to close off that fair value gap there on the daily reversal. Just dip down into here. If it leaves it open, that'll be interesting. Be like a small little daily fair value gap, breakaway gap. If we start to run back up, that'll leave that little piece open again. What we had was open from here to here. That created that little sliver of fair value on the daily. Now if we come down to the top of it, it's the inversion fair value gap. It creates that sliver again because we went through it, stopped. So now we have buy side, no sell side. So do we come back, finish it off, clean it up, then start driving through? This would be the ideal spot for me to take a long if it were available. So let's look at this on a, so that's this piece right here. So we'll see what's going on with them. See if that holds price. Okay, they were dipping back into it nicely. You never want to try and predict the lows, but I like this as an inversion fair value gap to continue on the upside. You give me the threshold of that and I'll take one small one for no, I'm going to wait for that. Hit the top of that daily order block, I think. Take one there. I'll take one there. A small one there. I'll take another small one in the middle. And then I'll take a final one here on the close. We'll make sure all our bot is turned off. Just let the engine run this one. There's another one. Oh, a little late getting there. And the last one will be over here. My stop losses are going to be just below here. If I'm wrong, then I don't want to take too big a hit. So I'm just going to leave my stop losses below this order block here. I want this on the 15 minute. I want this fair value gap we got in on inside that daily inversion. I just wanted that thing to hold price to go along. The bot can manage this here now. I think we're just going to go with some fun here today. I think we're going to go long. And we will keep this on the okay, so we got our higher objectives. We're at 737 now. We'll take a portion off up here. Equal highs. What does our hourly objective tell us? Yeah. Take a portion off right here. Right at that daily fair value gap again. We got a nice entry in off that inversion fair value gap. I think that's what that was on the 5 minute. Minute. 15 minute. It wasn't an inversion fair value gap. It was just a fair value gap refill. Come back, clean it up. Now you want to see get above this. This is the body getting above here if it stays above that. It's good. So the bot's moving up my stop loss now. It's taking a portion off. I think I'm going to move these down into here. I want this price to hold. Well, actually, I'd have to be just below here. I don't want to get... they're still in profit. So zero stress on this trade right now. We entered in a nice place. We've already taken a partial off. And we're looking to probably take some more off here and here. I just want this candle to do a big push now. Thank you. Now this should take out another portion there. It just did. Now we're down to like 80 cents on our trade. We've already unloaded portions. Oh, this is a... oh, this is another trade. No, it's not. It's the same one. We just put a bunch more buy limits and stuff in here. So we've ran that high. I'm going to close those out because I'll take some out, feed the wolf. Take a 0.6 out of there. We'll feed the wolf some more. 0.4 now. I like it. We're up in this area here. We've already ran the highs. So we're just coming back to give us some fills here in this and then push up for more. There's 1, 2, 3. that's not working. Something's wrong with our bot. Remove. They should have been loaded on and kept going. I think this is where the inertial trade was supposed to go. We'll put that one back in there. Stop loss is going to go down here because if I'm wrong, So we've run this high here. We're looking to come back probably to a discount range. This is the new little run that's been made. We got 10 more minutes before you run that high. 50% of this little range, it was created from the opening. Till now. We're inside this little inversion fair value gap on this side. The bodies, you see how the bodies are respecting the inside of that one? So I've got to wicks do the damage. There's a lot of waffling around here. I'm just going to get out and wait and see what's going on here. I'm going to wait for an opening. So we're going to wait now till 10 o'clock. Ideally, I'd like to see it punch out above that. And continue on for a higher time frame up here. Right now we're into the threshold of that candle there. So if this does reverse and come back down, fill this. Or it's just on a reversal because we have a break in market structure here on the hourly fair value gap. Breaker, come back up inside, hit the breaker perfectly, and then we start to degrade down. So this could be actually just a run reversal for down. We may not actually get the pump back into this. If we do, that'll get nice for a short. But we'll wait and see this threshold, see if this threshold holds, or if we're going to run one more time into this for a fill off of that and then continue short. So we're kind of stuck between fair value gaps on the daily here. I like this for a break-in structure, reversal into a mitigation block. We did not break an old high, so mitigation. Also breaker. We came up, hit the edge of the breaker perfectly here, inside the mitigation block. And now we're coming back up into another breaker. Last up close candle before I run below some lows. So we have a swing. We're coming back into it now. So do we find support at this and turn around and come back down? Look at the 30-minute. Breaking structure to the downside. Come back up into the breaker. Down, fair value gap. Breaking structure again. Come back up inside. Fill. Now do we continue down, or do we come back up just to fill the rest of this? Run on stops. Or is it just an overall continuation to run these old highs and continue on the upside? So if you can argue both sides, wait and see really. If you're looking at a quick return, this would have been a break-in structure, breaker, return to breaker. Objective is here. You want to see just a nice close of the fair value gap. And then if we lose the threshold, than the lows. So you would have got at least that. Coming up for 10 o'clock. I like this for 10 o'clock reversal. Little pocket right in here. Small little piece here. Stop loss up there. But we're going to wait for something that gives us the... this was the objective overall from earlier. I kind of bailed a little early. That was my objective here. Now I'm looking at the 5 minutes. It would probably be in here now. I hadn't already hit it. So now we're almost full of this fair value gap here. So now we're 1 minute away from the 10 o'clock. So let's look for this and this. Does this provide support on the daily? I like this inversion fair value gap here. To here. We have another one here. like this for a run back up, right off of that order block right there. Stop loss. We'll go down here. I'm looking for this to hold as an inversion fair value gap, this order block to hold. And let the wicks do whatever they do. They shouldn't get back down into here. I like that upside a bit more. So far it's looking good. I like this when you look at this play here, this big breaker. 1, 2, 3, 4 minute breaker. Let's go to the 4 minute. You'll have a good idea what it is I'm looking at. Or is it the 8 minute? There's an 8 minute breaker there. Go to 6 and see if you can see it. Oh, there's a bigger one there. So anyway, that's the breaker here. We come back into it and we're looking to continue on the upside. There's a lot of open up here at 15,480 to push through. No, we shouldn't break past this wicks. If we get past that, then we're getting into a consolidation. I can hear Michael now saying, you trail your stop loss too fast, man. This is a great psychological thing. I've been burned so many times in the beginning doing this, so I want to keep my losses very minimal. The more reason is this fair value, or this, everything's fair value for me. This wick halfway, I want this to be under halfway. If we break the halfway mark, then chances are we're going to be coming down into here. And we're inside this inversion fair value gap right here on the 1 minute. We hit the edge of it, so I want to see it stay above here. He sure is waffling around here. Shut my phone down here. I end up bailing out when you start seeing all this side to side motion. I want something that's quick. When you start getting into some chop like this, I'm not interested. So I'm getting out of that. Close all my positions. If it runs up now, I don't care. When you start to see a lot of this, I usually give it anywhere from 3 to 5 candles. And if it starts just coming back and forth like this, I just pull out. I bail out of it altogether, just because it ends up being this cluster. And it could end up running up, that's fine. But I don't like to see it kind of chopping back and forth like this. Then it just, there's a lot of inconsistency. I like to see this kind of stuff. Just, I've got purpose, right? Order blocks are set up. Fair value gaps are set up. We come back to them and we move away from them. This becomes high resistance. When you start to move back and forth really hard like this, it'll start chopping you up. So I'd rather not even play in a market that does that. So we moved I moved my live account today. So, and this account we moved a bit more. We had some nice little runs today. I think we have our overall couple of runs. Where do we get? 12. What are we at today? 12.
Hello there.
Hey, how's it going?
How about you?
Good. Welcome to the Breakfast Club. So we had a couple of, this has pretty much been the run today. We had 1, 2, 3, 4 hits, and we had some big runs and a couple of small losses and some runs again. So we ended up we moved that up a little bit. I've been experimenting the heck out of this thing with my bot, so I've really had some big drawdown on it. But we got some nice run here today off of this inversion fair value gap. If you look at our
I can't see your screen just yet.
oh, let me get you up there. There you go.
Thank you.
So we're looking today at a return to this sell side. This is an inversion fair value gap on the daily. So if you look at the daily here, and I go big on my screen, you'll see there's a little sliver between here and here. That's a little sliver of a daily fair value gap. Then we went up through it, came back, and we're on top of that sliver. So you wanted to get on it or just in it. We'd like to have seen it close. Ideally, we were calling for it to close and then return back up and start running for these old highs here. And the way it worked out was, as you can see, it came down. We had a break-in structure right here to the downside, created a fair value gap. That becomes a breaker now that we break this old low. And we came back up inside it. There's your return to. You're aiming for down here, the close of that fair value gap at least, so you can aim for more. That's our downside objective anyway. You get short, and then it came down and wicked into here one more time. Tag this. I got a couple of longs here on the live account, and on this account we did some couple of quick trades, and aiming for in here. Bailed out along the way. Got a little choppy in here, so I kind of bailed out. If you stay in the hour, it would have been a nice little just return to fair value gap again. So are we touching the edge of this and moving back up, or are we just digging down deep into here? So if you go down into your 30-minute, what down here, you see there's a small little 30-minute fair value gap now. But we just came back to the hourly body. Look at that, just tags it nicely. And now we're pulling back up. So we're looking for higher prices, I think. We have an opening here still. Inversion fair value gap here. We broke above it. A body breaks above it. Come back inside it right here. Right to the edge of it. And leave. Aiming for first objective would be the recent highs. Then the fill of that fair value gap. So we're looking for further upside prices. Five-minute. Starts to get really choppy here, so you're going to really watch your stop losses if you're see inversion fair value gap right here. From there to there. We went above it, came back, found support at it. I love these inversion fair value gaps. So the majority of my trades are lately is just off of these things. I look for them, get a nice body above them, come back, find support at them, and when they're stacked like this, you usually can take the second one, and in this case it was just here, down once, twice. It was just inside that first one. Didn't even hit the price imbalance there. It already ran through that, came through multiple times. Hit this one. So I just look for these key areas like inversion fair value gaps, imbalances.
Do you think the US dollar is going to keep going up at this point?
What's that?
Do you think the US dollar is also going to be climbing up at this point?
The US dollar. Oh yeah, because you're looking at euro, aren't you? Let's look at euro.
Well,
yeah, I called for euro to go down. This is where I was looking at it a couple of days ago. I dropped this blue box in here, and we hit the midpoint. So that's your also return to an old low. It looks like it, no, it looks like it's hit the bottom of this thing here. So that's pretty much closed off that fair value gap there. Let me just make sure that's sitting right. Yeah. So close up the fair value gap. Now we're looking for a run below these lows and equal lows down here. So if it closes below this threshold of this order block here on the daily, then we're probably heading down for these equal lows. It looks very heavy, obviously. On the daily perspective, it looks pretty heavy. But if this holds price, because we're sitting right off the rejection block down here, this poked into the rejection block, and you're 50% or 25% of that wick, and we got some reaction off of it, this has to hold price for an inversion. So if it does come back, I want to see it hit here and then drive back down for, you know, you're looking at Tuesday, Wednesday. So we're going into Wednesday. Excuse me. The CPI is tomorrow, so you don't want to get anywhere near any of this during CPI. It'll rattle your cage. So if it does do a quick run, it can run all the way down here. But if CPI pushes it hard and fast back through here or into here, like a big whip action to trace back into here before it runs back down. That's the scary thing about CPI, is it's all over the place. It can be a huge whipsaw, so it's best to stay out of it and wait. Michael has a way of trading things like non-farm payroll and TGF Fridays and small news events, but CPI, you don't want to get into CPI. It's just a lot of volatility, and there's not a lot of even if you wanted to get your perfect execution, they tend to reduce the amount of available assets at that time, just so the brokers and the spreads open up super wide. So it's best to just leave it alone until after CPI it settles down a little bit. Then you can get a better idea of where you want to go.
Sounds good.
Mm-hmm. Yeah, it's been super choppy on. So let's look at the hourly, and see if there's anything here in the hourly you might want to reach for. Oh yeah, there's a little pocket down here. That was this week's opening gap. You've got right here. New week opening gap ends right there. Then you take this and we split it. Head for the gold. Look at that. So there's the midpoint of the new week opening gap. Close on Friday, open on Monday or Sunday. And look how price has been, or the main bodies have been respecting that opening. Open, open, open. And now we start to work through. So where does it go to next? Midpoint, threshold, consequent encroachment. So hit it. The bodies are respecting it. So now where does this go? Do we run back up into the higher stuff, or do we push all the way through, fill the rest of this? There's a gap from here to here, and then there's just wicks on the upside. We have a small little tiny fair value gap that was filled there. So I like that, just to see if that's, because if you take this thing here and we blow this up into a bigger one and have a look at oops. Oops, 50%. I'll make sure I line that up on there perfectly on the 50%. So it's right on there. You see how it strikes it perfectly there? Let me make sure that's sitting right in there. There we go. So 25%. We got 25, 60. Let's throw a 75 in there. Add. So you get a bit of an idea what 75% looks like. So 75 is there, 25 is here. So you split that in half. So we've worked the middle point, but nothing's been worked below that. We have a couple of little tiny wicks that have jumped in there, but we haven't really worked the bottom half of that gap yet. So we have a little we probed into that. We haven't even hit the 50% of that. So with that fair value gap there, and we make sure it's a different color because it'll screw me up if it's blue. So we're going to go yellow for hourly. So that's your fair value gap. You come back up, find some support at it, and then we start to peel away for all these equal lows down here. If you're looking at quick, you know, some people might look at this and say, well, you're getting in and out too fast. It depends on your trading style, really. So if you're just sniping, you're just trying to get in here and out real quick, take 5 handles or, you know, 10 pips. In this case, from here to here is 14 pips. So if your stop loss is up there, above that candle, it's 11 pips. So it's a 1-to-1. Is it worth it for you to risk 1-to-1? That's up to you, I suppose. In terms of order blocks, some basic order block theories, which is where you're at. So you look for down close candles and up close candles. If you break an up close candle on the downside, like here, that validates this as an order block. If you break the upside of this candle here, which we don't, nothing gets broken to the upside, right? That one doesn't get broken. That one doesn't get broken, but the downside one does. The downside one does. And if this downside one does, then we have a continuation as a technical, or as a very basic order block kind of theory, right? So we have this order block is not validated until this candle breaks its high right here, okay? And then you add the two together. If they're side by side, that becomes a 2-hour breaker, or sorry, 2-hour order block. And you go to the high of that, and that 2-hour order block gets broken or validated right there. So your 1-hour one is done, your 2-hour one is done. Now you can't see that's the 3-hour one because they're not connected. So that's still a 1-hour order block because it's separated by up close candles. So every time you look at these things, you think, oh, well, okay, what's the slow general idea of where price is moving right now? And yes, it can whipsaw back against you. So it's just saying, when is this candle actually a valid candle? That is not really a valid candle because it's not really doing anything. It hasn't been validated on either side. It hasn't been validated on the upside, I should say. So if this candle pushed through here, that would be an order block that we could come back and say, now these key areas open up as potential PD arrays that we can use to either climb on it, to keep climbing back up like a rock wall, or we lose them and say, okay, we're still losing. This was just a whip, a run on liquidity above that order. All right. So this one here, when we break below it, then we say we'll come back into it. The PD arrays are the bottom, the open, and the threshold. And you want those to hold if you want price to continue down. It's kind of like reverse foothold in a climbing situation. Because out here in the mountains, we like to climb. So kind of look at it like a climber, like Michael describes quite often, as getting a foothold to continue up. And then you use more advanced stuff like fair value gaps. Do we break through them? Now do we find those as a foothold that you can step on to continue climbing up to higher PD array footholds, so on and so forth. Does that make sense, or did I get a little too confusing there?
No, I think I understand what direction you're headed in.
So for overall right now, because this one hasn't been validated on the upside, this one hasn't been validated on the downside, you're in a little consolidation here. You're kind of stuck. And
right.
It's the hourly, right? So if you're going to say, now if I was going to get right down to the 1 minute and try and snipe something out of here, again, you haven't got from the bottom to this to the top, you have 13 pips. Top of that one, 15 pips. So you really don't have a lot to run for. But as we continue to go down, you'll get the idea of what's happening on the lower time frames. Are we reaching for higher time frame PD arrays, and we're seeing some motion heading towards those higher time frame PD arrays, or are we still stagnant? So there's your 30-minute one. So we still have not got above this candle, even though we've got above the body. We haven't got above the wick, so that's still not a valid candle. We did poke below here, so this guy's been validated the moment we poke below it right there. So now you go, and we've got equal lows down here. So this is just not really doing a lot. So you have to start cutting through candles and saying, all right, where did we validate the recent one? So that one there got validated. This one here got validated. Here, here, here. We starting to get below it here. So now you look at that as the highest body candle. If that one's not the open close. Open is 225. Close is 223. So this is a bull candle here as well. The highest body candle becomes the breaker, because we have a swing point right here. Cut above, come below. So that becomes a breaker. So when we trade below it and we get below this candle here, that becomes a breaker. So when we start to come back into it, this we're hoping will provide support to allow us to keep coming back down. So as we come back, as we break this right here, now we look for validation. So we open, we close below it. Now, when this candle comes back up, look where it hits. Bang. Right off the breaker, right off that PD array, opens, comes into it one more time, then starts to trade low. So what do you aim for? Again, it's always the most recent low is the safest thing to start unloading your position. So the most recent low is this candle here. So you take that out there, you take a portion off there. Your stop loss is sitting above that candle there. Then all of a sudden you see it whip all the way back up into breaker again. Pull back down. Now again, at the most recent low is this guy. You want to take a portion out here. Again, they're just quick sniping ways to take money out quick. Yeah, that could have ripped right down there and you said, damn it, I got out. I should have stayed in. Shoulda, coulda, woulda. Pay the trader, man. If you got an opportunity to take some money, take some money. And in consolidations, you're mostly gambling anyway. But I'm just trying to show you a PD array to PD array, real simple, of when they get validated, when they're taken back to, and how you continue to get support for them. We have this guy on the upside. We broke the upside of that, so that validates it as an order block. But as soon as we open in here to a breaker, you got order block, breaker. Which one's stronger? Well, breakers are way stronger. You hit it, and then you'll keep an eye on it. So your stop loss is sitting up here. So you've got a 7 pip stop loss for a most recent low, which would be this guy right here. So 10 pips. So you're making just over 1 times your profit. Comes back up, takes it out. PD array to PD array. Now we've broken this guy here. We whipped all the way through him. So if you look at this as an order block and say, well, we have here, here, and here as our support, we just blew right through them all. Well, where are we heading back to? Breaker. When you've got this guy sitting inside a breaker, then you have to make decisions of, do I want to provide support with this, or is this breaker my support? That's more advanced thinking stuff. I'm just trying to show you the real simple, basic order block idea of how it kind of sets up and how it runs PD array to PD array. But here's a good example of when it drops below it and then runs all the way through all the 1, 2, 3 arrays and runs all the way back into the breaker and then continues down. This one here is probably 1 pipette below it. So here would be low is 0.55. And this one here is 0.57. So it's 2 pipettes below that. And you may not have, you wouldn't have got it anyway, because your spread wouldn't have taken you out there. You'd have to be visually seeing that and then close it out. But we're not above this one now, so you're kind of stuck with this big long wick candle here. You're inside that. We did have a little wick below. We're back into breaker again. See how this one here hits the breaker again? So if we get above this candle here, that one, this will become the new breaker. That one and that one together. Get some support on that, and off you go. So this is not really doing a heck of a lot for us. Let's go down to a lower time frame, 15 minute. So order block validated. 1, 2, 3 is your threshold. They come down to the threshold. We also have a fair value gap sitting right there on the 15 minute, right around the threshold of that candle. And it seems to be holding price on the 15 minute. Look, stab, stab, stab. It's filled this. Now, you're between here, this order block, and that guy, because we got below him. So he's above him. So you're really, again, in the consolidation of here to here. Do we come back up, find support here and here? Or do we push all the way through there and head all the way back up to our breaker again? It gets really messy, right?
Yeah, it's just getting stuck in one little area there.
Yeah, so you don't. I'm just trying to show you the PD array to PD array that you're in. So you can, if you overshoot, you say, "Oh, I'm heading up for here." Well, then it bounces off of here and comes back down again and runs and takes out your stop loss. Well, it's because you're not looking at the order block that it's presently keying off of. Yeah, that higher stuff's possible, but when you're down this, you're starting to get into these lower time frames. Start looking at the ranges that you've just created from here to here and say, am I playing inside this range? Right now you're playing in a 20 pip range and you're on the discount portion of that, right? So there would be, oh, you're almost at the 50% mark of that range. High to range low. There's your 50%, so you're just coming up, banging off of it. So slightly discount still. Look at this retracement here. Come down, retrace 62%, come back down into fair value gap. 62%. I like looking at these. They're little consolidations, but they still tend to reach for PD array to PD array, premium to discount. What other one you're looking at? Oh my God, am I ever glad I got out of that. This is the tech. This is I was mentioning this earlier. Anybody else who's watching this, I got out up here because it was too choppy. Remember, I was in the 1 minute and it was starting to get really choppy in here, and I got out. Look at that. That's why I don't like being in chop. because you're going to get beat up in there, and all of a sudden it just gives you a nice little fair value gap here. You come in, you buy into it, you're like, yeah, I'm going to go long, and you just hit the halfway point of this wick, and then she just eats you up. 17 all the way down into here. So now, is this a reversal? We have no swing here. We have a breaker right here. If it eats through this breaker, last down close candle before the run above, it's the parent breaker of that whole run, price swing up. So are we gonna break this spot right here? So as you see, fair value gap, we came down all the way back up to the edge of it. Bing, hit the edge of it here. Now, I'm stuck in this guy. Are we going to eat through this? Or are we going to start to bang around in here, hit up here, get some support off of this? So this will be an interesting one to look at for where are we going to go for support here? We've come back down to the imbalance, little imbalance right here. Tag that again. Now do we continue down on the downside? There's the edge of the fair value gap there. Look for the threshold here. Good, we're eating through that. Now if the body ends here, look for the rejection block next. There's a rejection block. Tagged it nicely. Now, do we come up, find support off of here? Now this becomes an inversion fair value gap. Do we find support off of here and continue on the downside? So we did get below the threshold of that. That's 88, so 44. Yeah, we're below the threshold. We have a new fair value gap from here to here. There to there. Came back, clipped the edge of it. Now does it give us a decent fill? There's return, there's the fill, almost the fill. So we're seeing this thing provide some support here. That's what we're looking for. Now does it continue down on the downside? So basically that's what you're looking for when you're looking at these fair value gaps. Does it, do we break through it? And now when we come back to it, does it provide a level of support for us so that we can continue on the downside? We have an order block here as well. So we dip into 25% of that wick versus 50%. And then we have the order block open threshold. So right now, that was, I didn't take the trade, but we're just kind of pointing it out. Because we are in demo, and you should never trade. Make sure everybody understands. We should never trade live unless you know what you're doing. None of the advice I'm giving you here should be classified as advice on trading. You trade at your own risk. You take your own chances. That's my disclaimer. I am not a trading professional. So you saw that little reaction off of that, which is what we were calling for, right? Now from there to there, just back to the rejection block, that's 9 handles right there. Now, if you're just sniping 5 handles real quick, you just got your 5 handles. Aiming for that low, there's 15 handles. You think, okay, this is great now. So now we know we've got now we know we got direction. We got pretty much nailed it right off of our inversion fair value gap there. We came back to it, hit it nicely. That would be a nice short right there, which is exactly what we called partial out right here. You take a little partial out there. I would move my stop loss to break even. Actually, I'd move into profit. A little bit into profit. Take a piece here. Move yourself to here. And then wait and see. Let it push through. Now it's a zero stress trade. Zero stress trade. So even if it runs back against you, oh well, you took your piece here, and you have a little tiny piece on the end there. And if you complain about taking trades like that, then I don't know what to do. I don't know what to say to you. Pay the trader, man, because this sucker, like I said here, this could turn on you anytime. When I wanted to go long up here, I was calling for much higher prices, and I saw this chop happening here. I was like, no, my rule is I'm out. You get 3 to 5 candles in here, and if you keep dicking around with me, I'm out. As soon as I can see myself an opportunity to make a couple of bucks, I'm out. I'm wait for something to happen. And sure enough, it completely turned against me. Now we're heading in a different direction. So as it does, then we see a new opportunity to set up here, because we'll start back up here. If you have order block, we get below it right here. That validates it as an order block. We see how we never came back into it. We get below that guy there, right there. It validates it as an order block right there. We come back, just tip inside it. We have this cluster here. We also have this becomes a breaker the moment we get below it. So because it's the last down close candle before a run above these old highs here, right? So that becomes a breaker. So let's look at this, block it out, and you say this breaker is very important in terms of how, as soon as we get below it right here, you trade below it, that validates it as a breaker. Now anytime we return to it, so when you closed right here and you opened here and we return to it, that's your short. Now some people might go, it's pretty ballsy to take one in there. So you take it really light there, and you want to put your stop loss obviously above that high there. So you calculate your distance. If you're going 1%, you want to make sure you calculate the distance of that and make sure your leverage is equal to or less than 1%. If you're putting your trade in here, if you decide I want to go to a halfway point, or 25% of that would be a nice weakness. If you get weakness in there, then calculate 1, 2, 3 trades. What would 1% of that all be with the stop loss sitting up here? You'd be in on that one, and you'd be running for low, swing low, swing low. And I just take out portions of these on the way down. But let's say you never got on that. Let's say you were looking for, I wanted it to come back into here, or I wanted it to come back and tag these old lows, fill this fair value gap, whatever, and it didn't work. Say, all right, I don't get a chance to get in there. Then you wait for a break in structure. We have another break in structure here. We still don't get a chance to get back on it. We have another break in structure here. You still don't get a chance to get on it. And your downside objective is fully hit already. So now you wait for a new setup to happen. Well, yeah, there's no swing points here to say we have a break in structure to the upside because we're in a steady run all the way down. But you do get this fair value gap sitting in here as you say, all right, how is this fair value gap now going to provide support? Is this now a new swing and when I run back up into this range? And did it do it? It came back, tagged it, and then as soon as it tags that, where's the order block theory again? It does it here, and then you go, as soon as it comes back up into that low, I want to take a piece off because it's the top of your fair value gap. So if it opened here, came down, closed you out, then rode all the way back up here into that order block and settled there. It's easy to say in hindsight. But PD array to PD array, you either have to trade PD array to PD array or start getting greedy and jumping through a whole set for other stuff that's further up here that you never get. So if you just go array to array, again, you decide how much of that you want to risk and is that worth the risk for little pip runs like that. But as soon as you see this breakdown below here, that's what I was looking for when I was calling it in here, is to say, does this thing provide support either above or below as a stepping, as a rock climber? You wanted to say, where's my step? Where's my foothold? And my foothold is right there, and that's what we're calling for a run here. Quick little 16 pipper or 16 handles. Grab 16 handles out of that, move to break even the moment you get your objective hit, and then all of a sudden it comes back up and takes you out. So whatever portion you took off there, plus that little break even with a little bit of profit I was talking about, you would have paid the trader. Now we have order block, run above it, validate, come back, we're inside that wick, little fair value gap sitting right there now. Now we're back into fair value, this inversion gap now, right? Now is this inversion fair value gap going to hold price? See how this little guy right here, now that we've come up through it, is this going to provide support as a step up now to continue going up? Because we're inside this inversion one now. So you got to watch how they overlap. We always cut through candles. Don't ever buy that crap that it's just the previous candle. This stuff's all done. It's all done and dusted because it's not. Here's our little fair value gap here. Order block. Threshold. There's your tag. Fill. PD array. Next one's here. That one's validated already. We've got below them. We come back into them. So you're between here and here. This. So do we lose this? Okay, rejection block. So this is good. So now we've got a new potential fair value gap up here. We're eating through this order block. We've come all the way back down to rejection. Where does this close? Now if we break structure to the downside, this could be a 3 drives pattern and then a reversal. That's 1, 2. Are we driving through one more time? This will be interesting to see what happens. You ever heard of the 3 drives pattern or 3 Indians pattern before? Are you still there? Oh, Henrik's gone quiet on me here. So what we're looking for is a 3 drives pattern here. 1, 2, 3. So it should drive below here. And then will there be any measure of reversal here? There we go. 3 drives. Now, let's see if there's going to be a reversal. Excuse me. So are we going to break this high, find some measure of support, continue up for all this SIBs that are sitting in here? We're hitting 50% of a big range here. Look at this on the hourly. Right into this order blocks threshold right here. Now does it hold price? And are we coming back into this inversion again? You see that? That's an inversion fair value gap there. And another one here. No, that's not an inversion fair value yet because we just come back, fill it. If we were to come back through it and up, then that's an inversion. So this is just a fair value gap that we're looking for a fill. So this one was the downside one. This is a SIBI that makes that an inversion. When we get above it, come back to it, find support, leave. And when we have a BISI, this is just a fair value gap fill. So are we driving through this threshold, or is this threshold going to hold price? And we're coming right back into some new week opening gaps. So I don't think it's going to. I think it's going to come back all the way into here. That's the downside I'm looking at for the new week opening gaps. There's a couple that are overlapping in here. So when you take this little dude here and you throw him in there, you'll see. Drops a whole cluster of stuff on your chart. Gives Asian kill zones and fair value gaps, which is what I've already highlighted here and here anyway. So it's come back and hit that the top of the fair value gap right here. So I'm looking for this guy right there. So 15,329 in this area here. We'll put a little box here. Michael did this years ago. It was kind of awesome. When we were just starting out, he threw a box down here and said, I think it's going to come right down into this here box. And we're like, no way. And he had it just drawn over here somewhere in the middle of the chart. And we were watching the thing go down. It came close to it, then it came back up, and we're like, no, no. All of a sudden, boof, right inside the box, landed perfectly in there and left. And we were like, oh, this guy is controlling the market. It's amazing. And I know he was just doing it as a little trick because he knew exactly where price was going. But to us, it was just watching kids at a magic show. This magician comes out and just drops it right in a box and says, how do you know it was going to land perfectly in there and then leave that box? That was 7 years ago. 7 years ago.
Nothing too crazy going on, eh?
What's that?
Nothing too crazy going on, eh?
No, not really. But this is a great example of on the 30-minute of a break-in structure here. You see that? Break-in structure to the downside. We have a body that breaks below that. I love it when bodies break below it, and we have a breaker sitting inside there. You come back inside it. You trade 1, 2, 3 up to your breaker and the full close. So you have 1, 2, 3 right there. So you would have got on right there. And you're aiming for close of these fair value gaps here. And boom, all the way through to the very bottom. So you would have been fully there to a full close of that. That's 55 handles. You're getting near Michael status when you start doing over 50 handles. Right? And then all of a sudden it comes back down. So once you've hit that and it runs back up again inside an area where there's a breaker. Breakers love, that gives you so much stability on top of a daily fair value gap. Look at that. Right in the breaker, right on the objective for the daily fair value gap. You load another one on there to get short. And we've already blown through this. So you want to see a candle get its body right through it. So boom, it ends up going through it. You come back, find support at it. Body breaks below the low. That's just the general rules that I like to use. Come back up, hit it, and now we're heading for old lows. Fair value gap fill. Another little fair value gap down here. So that's just a pristine kind of way to looking at if you wanted to trade the 30-minute, much more cleaner than what I was getting banged around in on the 1 minute. Much cleaner. If you like to wait, you don't mind waiting, 30-minute candles. There you go.
All right, Darren, I think I'm okay for today. Thank you so
Okay,
much,
buddy.
man.
Well, thanks for popping in. You're my only customer for the last little while, but I appreciate you. Thanks for the physio yesterday. The workout was good.
Perfect.
All
See
right,
you
bud.
soon.
All right, take care.
Yeah, bye-bye.
All right. Stand by for a second. So Anyway, that looks like it's it for me this morning. It's coming up for 11 o'clock New York time. So thanks a lot for popping in. Thanks for Henrik for popping in and having a little chat. I enjoyed that. So those of you who are looking at this live or after the fact, then I didn't even look on my thing today to see if anybody was having a chat with me. Stand by. Let me have a see if anybody was in here. And live. Nope, no one else is watching. Just me. Just me and Henrik for a second. Yeah, so those of you who are looking at this afterwards, we had an excellent day today. Markets were a little choppy, but gave us some excellent entries. I hope you guys see how some of the entries worked out to our favor. They worked out exactly as we called them, which is what this is all about. So until I see you again tomorrow, all the best, you guys. Take care, and thanks for coming to the Breakfast Club.